Before you publish your 2027 open enrollment guide, do these 6 checks. 1 protects the plan, 1 protects employees and their HSA, and 1 keeps part of a dependent care FSA from becoming a ugly tax time surprise. I'll show you what is final, what is still missing, and what to check in the plan, the benefit system, and payroll. Check number 1, the high deductible health plan's deductible. Start with the high deductible health plan employees use that comes with an HSA. Keep in mind, the deductible is the portion the employee pays before the plan starts picking up. For 2027, the deductible must be at least $1,750 for employee-only cover and $3,500 for family cover. That's only a $50 difference for individual coverage and a $100 difference for family cover. That's not a large variance from the 2026 minimums. It's a small change with a big consequence. If the plan stays at the old minimum, it stops being HSA qualified on January 1. The money in the HSA stays put, but employees in that plan cannot add new money while the coverage does not qualify. Your action is simple. Confirm both deductibles. Ask your carrier, ask your broker in writing whether the full 2027 plan design remains HSA qualified. Make sure you save the answer. Deductible, $1,750 employee only, $3,500 for family. Quick note, this is a plain English version, not legal or tax advice. Make sure that you confirm with your broker and your carrier partners before you make any changes. Check number 2, the high deductible out-of-pocket maximum. The same plan has a second test. The out-of-pocket maximum is the most an employee will pay out-of-pocket for covered in-network services. For an HSA qualified plan in 2027, the stop sign cannot be higher than $8,700 for employee-only cover and $17,400 for family cover. Remember it this way: the deductible cannot be too low, the out-of-pocket maximum cannot be too high. Check them together. If either one misses, call your broker or carrier before the plan design is locked. Out-of-pocket max, no more than $8,700 for individual cover, $17,400 for family cover. If this is useful, subscribe. Check number 3, the HSA election cap. Now we're going to move from the plan to the benefit system. For 2027, the HSA limit is $4,500 for employee-only cover, $9,000 for family cover. Employees who are 55 or older will be at the end of the year are entitled to contribute an additional $1,000. The word of the day is total. It includes payroll deduction, company money, and money paid into another HSA during the same year. Say the company puts $750 into the HSA of an employee who is under the age of 55 and is on individual cover. That employee should not be able to elect $4,500 through their payroll or Ben admin system. The payroll cap is actually $3,750 because the company $750 counts towards that $4,500 max. If too much goes in, the employee will have to remove the extra money and its earnings. If it stays, it's a 6% tax penalty that will apply every year until it's corrected. The system cannot see another health savings account through a former employer, nor will it just know of any mid-year eligibility changes, but it can prevent the obvious mistakes. Set the payroll cap by the coverage level, subtract the company contribution, and add the extra $1,000 only when the employee qualifies for it. Then warn the employee the outside HSA contributions count too. Payroll cap equals annual HSA limit minus employer contributions. Check number 4, the limit inside family cover. Now look at the family out-of-pocket maximum again. For most employer plans, one person in the family cannot be required to pay more than $12,000 for covered in-network care in 2027. Your family out-of-pocket maximum may be the $17,400, but one person in that family cannot be forced to pay all $17,400. That person needs their own stop sign, and it has to be $12,000 or less. The technical name is called an embedded deductible. It's also called an embedded individual out-of-pocket maximum. In normal words, it's the per person limited inside the larger family limit. Ask your carrier or your broker this exact question. Does our 2027 family coverage have a per person out-of-pocket maximum of no more than $12,000? Get the answer in writing and save it. Family cover, per person stop sign, $12,000. Check number 5, both FSA settings. This check has 2 parts because even though they are both FSAs, they are completely different types of accounts. The IRS has not released the 2027 limits for the healthcare FSA. The limits for the dependent daycare FSA remain at the $7,500. Do not copy the 2026 numbers into your new guide and hope that it's right. Leave a visible placeholder, then put the update in your open enrollment timeline with an actual person's name attached. So if you carry a team, assign that task to one of your members or assign it to yourself or assign it to your broker to say when the IRS releases this number, then you know to go back to change it in your communications. The dependent daycare FSA is different because the federal limit is the $7,500, but there's an additional criteria that you at least want to make mention of. For any of your teammates that are filing married but separate, they have a different cap. It's $3,750, and that does not matter if they are the ones who are only contributing into the plan. The IRS decided that they can only do the $3,750 if they are filing married but separate. Mention the filing status impact during open enrollment. But do not change your benefit system because of this outlier with the IRS, and also check your plan documentation. Do not guess who's actually going to be impacted because you may have some people on their tax status that can say married filing jointly or married filing separately, but they could change the status at any time during the year. What you will want to have some disclaimer within your benefits administration system. So when they go to enroll, if you are filing married but separate, IRS states you can only actually contribute $3,750. That's it. Health FSA is pending the IRS limits. Check your plan document if the $7,500 is in play, and then just have disclosure for the $3,750. Check number 6, the ACA affordable price. Here's the ACA question that's typically the hot topic during renewal time. How do we know whether the price of the cheapest employee-only plan is affordable? First, ask your broker or your ACA vendor, depending on who's responsible for your ACA filings. Does our plan actually qualify as minimum value? Get written confirmation and save it. Next, you're going to want to look at the numbers. For January 1 and 2027, using the poverty guideline, the lower 48 states and DC, that per monthly premium is $135.92 or less. If your premium is $135.92 or less, then that's a simple test and it passes. Think $135.92 as a green light, not a cliff. If it's above it, it doesn't automatically mean that you failed it or that it's unaffordable. It just means that you have to do a different test. Ask your broker or ACA vendor to test the price using the employee pay or W-2 wages. Get the result in writing and save it. If a full-time employee gets financial help on the marketplace, the IRS may check whether the employer offered affordable coverage. Your saved test supports your answer. So here's a recap. Here are all 6 checks that you will want to take. Number 1, high deductible, deductible. At least $1,750 for employee-only coverage and $3,500 for family. Number 2, high deductible out-of-pocket maximum. No more than $8,700 for individual cover and $17,400 for family. Number 3, the HSA election cap. Start with the $4,500 for employee, $9,000 for family, then subtract the company money. Add the $1,000 catch-up if your employee is eligible. Number 4, family coverage needs a per person out-of-pocket stop, $12,000 or less. Number 5, leave a placeholder for the healthcare FSA for when the limits are actually released. For the dependent daycare, its limit is already set at the $7,500, but check the plan document and system capabilities to see if a warning can be triggered for the married filing separate group. Number 6, for January 1, the lower 48 and DC, $135.92 a month premium passes the ACA affordability test. If it's above it, run another test based off of eligible earnings for that employee. So here's the real deal. Nobody tells you the hardest part about all of this is not the math. The hardest part is knowing which number applies to which plan, and then what do you do after you actually get those numbers. You can be good at the job and still miss one. I have had misses over the years, and I have learned from all of them. The admin who avoids the January cleanup is not better. They just know how to write things down. They know when the IRS typically releases things. Don't get overwhelmed. Know that you will get through it, and this number game will eventually work itself out. If open enrollment communication is the next thing on your list, I've got you covered. I created a drop template for easy employee communications for open enrollment emails, and it's free. The link is in the description box. And if you're curious about more information that has to do with benefits, I encourage you to go to ericakirby.com and see what's going on. Just remember, every plan is a little bit different. You will get through this time. You are not alone. Don't change yourself for other people.